In negative territory following the recent IMF growth forecast of 0.8%. The manufacturing industry in particular is in the doldrums, with the sector faced with numerous challenges, including high production costs, weak demand and labor unrest. It is vitally important for government, business and labor to engage robustly and come up with solutions that will result in survival of the manufacturing sector. To talk about the challenges facing the steel manufacturing industry, we are joined by Henk Langenhoven, a chief economist at SABC, Steel Engineering Industry Federation of South Africa. Thank you very much for joining us. Good afternoon.
Thank you, Colin.
Yeah, just give us a picture of how you interpret the situation regarding the subdued economy, the high production cost. How is the industry thriving under these circumstances?
Well, the industry is not thriving, it's contracting. Just to give you the numbers, we think that last year was about 3% lower the production on the previous year, which was 2% lower on 2014. So it is not doing well. And it's a combination of our international markets. We export a lot, 40 to 50% of what we produce. And that has been very subdued. The same type of trends you see, as you just mentioned about Kumba and its product, is very much the same situation for us. The rand depreciation against the dollar did help a bit, but it hasn't. If you look at exports last year, in nominal terms, in rand terms, in other words, it dropped by 2.5%. If you take the dollar windfall out, it dropped by 25%. So we've not been able to maintain the international markets that we had. Of course, that we have no control over, and if you are not competitive, you won't be able to re-enter into that market. Domestically, we produce 90% for other industries. So we produce a lot for the mining industry, and you just talked about the mining industry. They're not investing. Lots of shafts are closing down, and low investment means low demand for our products. We provide a lot to construction. Construction has not been doing well. The building sector has been very, very subdued. Civil engineering is at a high level, but also tapering off. And the other part is the motor industry. And we've just seen last week or beginning of this week how much car sales have been dropping, both export sales as well as South African domestic sales.
So you reckon that the current economic climate, given the weaker rand against the dollar, and just the announcement just now by Brian Molefe saying that, there hasn't been load shedding, and I saw there was an article where you were quoted that, there was the way in which load shedding was hampering production holistically. So right now, do you think this is not working on the upside for the industry?
Look, the fact that there wasn't load shedding is a very good thing, and there was very little of that this year. We were, of course, influenced quite substantially in the previous year and the year before. And as a matter of fact, the demand from our sector is actually lower than it was 7-8 years ago. So the demand is also lower, which has helped Eskom, and we're glad that could happen, that they could get ahead with their maintenance. But it's a combination and accumulation of factors. We had hoped that after the strike action in the middle of 2014, that we would recover. But during the last part of 2014, we had a terrible part of the load shedding. And international economies were just slowing down as well. And in 2015, a combination of production resumption at some of the big producers gave us the impression that the first half of last year would have been better. It was slightly, the first quarter. And then the international market collapsed completely, and the domestic economy also slowed down. So the whole combination of factors spilled over into 2015. And the second half of 2015 was actually even worse than the first half.
What do you make of government policy and interventionist mechanisms that are put in place by government to get the society to try and hedge some of the risks involved?
Look, it's on a broad basis, taxes and spending, which we know is under threat, the spending side, and we're looking forward to what the Minister would be saying on the 24th. And of course the Reserve Bank, it's not government, they're independent, but they are very constrained by what happens internationally. We have to look at what happens with our rand and the flow of funds, etc. Domestically, government has listened. They realized that we could lose, for example, the basic ferrous, the iron and steel part of the sector, which feeds into the rest, the downstream, up to things like components for television sets and electrical machinery and equipment. So they did step in and supported tariffs for protection against international surpluses that are really coming into the South African market. I'm afraid that those are merely stopgaps. That happened internationally. We were one of the last countries that actually instituted tariffs against cheap products coming in. We will have to have a good rethink about what we should do to get productivity back, higher and better technology, and discover and explore and expand the niche markets that our sector do have.
But is there engagement?
There is engagement. I think there's a second level of engagement needed after the rounds of convincing government that tariffs was necessary. There will probably be countervailing or other protection measures to help the sector. Of course, the weakening exchange rate does help. It makes imports more expensive and provides, in a funny way, more scope for the domestic producers to produce at larger scale. That's really one of the big issues in the South African economy, and it may sound very contradictory when I say to you, the South African market is both too small and too large. The downstream sector, away from just taking the iron ore and making steel out of it, is very small. And for it to produce at scale and at comparative costs to the rest of the world, it has to have bigger markets and it has to be able to compete outside. And the market is so subdued internationally that it's very difficult to actually, at this stage and at this phase of the both international and local market, to penetrate and actually take advantage of that.
I've actually run out of time, but then the question of job losses that are going to be, that they are imminent actually right now, currently in the industry, some firms closing down. Going forward, what needs to be done? A very quick one for you.
It is very varied. The basic ferrous guys, the metals, and they have stabilized. Their employment numbers have stabilized. But there's definitely indications from many indicators that in metal products, which is infrastructure type of products, machinery, electrical machinery, and in the plastics industry, there will be further job losses, unfortunately. All the confidence indicators are showing that might happen.
Okay, let's leave it there. We're speaking to Hank Langenhoven, Chief Economist at SABC, that is the steel engineering and manufacturing industry of South Africa, talking to us right here on News Today. We're going to have to leave it there and take a break. I'll be back later on in the program to give you the latest on what's happening in the world of business. And let's just take a breather. When we return, we'll be talking about